November 6th, 2022. A billionaire is playing League of Legends in his penthouse in the Bahamas. 3 days later, 32 billion is gone. 1 million people lose everything. How did one guy with bad hair steal more money than Bernie Madoff while dating his coworker and living with 10 roommates? And why did Tom Brady give him 50 million to make it happen? Let me paint you a picture. 2019. Sam Bankman-Fried, everyone calls him SBF. He's 27 years old, worked at a trading firm for 3 years, and he notices something insane. Bitcoin costs $10,000 in America. In Japan, $11,000. He's literally buying Bitcoin in the US, selling it in Japan, and pocketing $1,000 per coin. This is called arbitrage. And for about 6 months, he's making $25 million a day doing this. So he starts a trading company called Alameda Research. Terrible name. Sounds like a dentist's office. And he's making so much money that he decides, why don't I just make my own crypto exchange? Because here's what most people don't understand about crypto. And this is why he got away with it for so long. When you buy stock on Robinhood, there are rules. The SEC watches everything. Your money goes to a bank. That bank is FDIC insured. There are adults in the room. Crypto, it's the Wild West. There's no FDIC insurance, no real regulation. You're just trusting that the exchange isn't lying to you. Imagine if you walked into a casino, gave them $10,000, and they just promised to remember that you gave them $10,000. No receipt, no contract. Just trust. That's crypto exchanges. So SBF launches FTX in 2019. The pitch is beautiful. We're the safe crypto exchange. We're the adults in the room. We have risk management. We're not like those other sketchy platforms. And people believe him. Why do they believe him? He went to MIT. He worked on Wall Street. He's sleeping on a beanbag in his office because he's so dedicated. He drives a Toyota Corolla. He's donating his fortune to charity. He's the guy your mom would trust with her retirement savings. 2020 and 2021. Crypto goes absolutely vertical. Bitcoin hits $60,000. Everyone and their grandmother is buying Dogecoin, the market is pumping, and FTX is growing like crazy. They buy naming rights to the Miami Heat Arena for $135 million. They're sponsoring Formula One teams. Tom Brady and Giselle become investors and spokespeople. Steph Curry, Naomi Osaka, Larry David, they're all in commercials. But here's what's happening behind the scenes. And this is where your brain should start screaming. Remember Alameda Research? SBF's trading company? The one that's supposedly separate from FTX? They're not separate. Alameda has a special account on FTX. They can borrow unlimited money from customer deposits. No collateral, no margin calls, no limits. Picture this. You deposit $10,000 at a bank. The bank takes your $10,000 and gives it to the CEO's other company to gamble at a casino. When you try to withdraw your money, they say, "Sorry, we lost it. Betting on red." That's exactly what's happening. There's a guy named Sam Trabucco. He's running Alameda Research. He's 30 years old, making $50 million a year, and he's tweeting about buying a yacht. Caroline Ellison, she's co-CEO of Alameda. She's also SBF's on and off girlfriend. She's 28. She's writing blog posts about how she's okay with lying if it serves a greater good. These are the people controlling billions of dollars of customer money. The crypto market starts crashing. Bitcoin falls from $60,000 to $20,000. Other crypto companies start collapsing. Celsius Network, bankrupt. Voyager Digital, bankrupt. Three Arrows Capital, $10 billion hedge fund, gone overnight. And SBF? He's on Twitter playing the hero. He's bailing out failing companies. He's giving interviews saying FTX is fine. We have billions in reserves. He testifies before Congress about crypto regulation. Congress loves him. They think he's the responsible one. Meanwhile, teachers in Ohio are checking their FTX accounts every day. Their life savings is on this platform because Tom Brady told them it was safe. A guy in Singapore put his entire mortgage down payment into FTX because it had a Super Bowl commercial. November 2nd, 2022. CoinDesk publishes an article looking at Alameda Research's balance sheet. And it's bad, really bad. Alameda's assets are mostly FTT tokens. That's FTX's own cryptocurrency. Let me explain why this is insane. Imagine if Tesla's main asset was Tesla gift cards. Alameda is using tokens created by their sister company as collateral for billions in loans. If FTT becomes worthless, so does Alameda. And if Alameda collapses, it's borrowing from FTX customer funds. November 6th. Changpeng Zhao, CZ'd. He runs Binance, the world's largest crypto exchange. He tweets that Binance is selling all their FTT tokens because of recent revelations. Within hours, everyone's trying to sell FTT. The price crashes 80%. Customers start withdrawing money from FTX. $5 billion in withdrawal requests in 72 hours. SBF is on Twitter saying everything's fine. FTX is fine. Assets are fine. November 8th, 6 a.m. FTX pauses withdrawals. November 8th, 6 p.m. SBF deletes his tweet saying assets are fine. November 9th. Binance announces they might buy FTX. November 10th. Binance looks at FTX's books for one day and says, absolutely not, and walks away. November 11th, 4:30 a.m. FTX files for bankruptcy. $32 billion in customer assets. Gone. 1 million customers. Can't access their money. FTX had $900 million in liquid assets and $9 billion in liabilities. There's a teacher in Texas who had $180,000 in FTX. Her entire retirement. She's 62 years old. She has to keep working. A guy in Japan lost $4 million. It was his parents' money. Money they saved for 40 years. And here's what investigators find when they look at the books. FTX bought $300 million in real estate in the Bahamas. Penthouses for executives. They spent $40 million sponsoring a Formula One team. $200 million on naming rights to the Miami Heat arena. Sam's parents, both Stanford law professors. They got a $16 million house in the Bahamas, just as a gift from the company. There's a signal chat that leaks. It's the inner circle at FTX. Sam, Caroline, the other executives. Someone asks, the exchange is missing $8 billion. How did this happen? Caroline responds, we borrowed it for Alameda. We used it to make bad trades. We lost it. They borrowed $8 billion of customer money, gambled it, lost it. But here's the part that makes me lose my mind. Sam Bankman-Fried wasn't even watching the company collapse. November 6th, the day the bank run starts, he's playing League of Legends. His company is imploding, customers are panicking, and he's playing video games. November 9th, while negotiating with Binance, he's tweeting about random philosophy and playing video games. The absolute audacity. December 2022. Sam does a media tour. He's doing interviews with the New York Times, giving statements saying he didn't knowingly commit fraud. He didn't knowingly steal $8 billion. It was an accident. He just accidentally moved billions in customer funds to his trading company and accidentally lost it. But here's where he makes a fatal mistake. He won't stop talking. His lawyers are begging him to shut up, and he's doing podcasts, Twitter Spaces, interviews with YouTubers. And every time he talks, he contradicts himself. I didn't know about the loans to Alameda. Then texts leak, showing he approved them. I thought we had more money. Then spreadsheets show he was tracking everything. It was a liquidity crisis. Fraud investigators prove $8 billion was intentionally moved. Caroline Ellison, his ex-girlfriend, co-CEO of Alameda, she cooperates immediately. She pleads guilty, agrees to testify, And she brings receipts, signal chats, spreadsheets, voice recordings. Meanwhile, customers are getting nothing. The bankruptcy lawyers find $900 million. That's it. Out of $32 billion. People who had their life savings on FTX, they might get 10 cents on the dollar years from now. Maybe. December 12th, 2022. Sam Bankman-Fried is arrested in the Bahamas at his luxury apartment. He's extradited to the U.S. His bail is set at $250 million. His parents put up their house. He gets to go home to California under house arrest. The charges: wire fraud, securities fraud, money laundering, campaign finance violations. He donated $40 million to politicians, mostly Democrats, but some Republicans too. Everyone has to give the money back. October 2023, the trial starts. Caroline Ellison testifies. She says Sam directed everything. He told her to commit fraud. He knew exactly where the customer money was going. November 2nd, 2023. Guilty, all 7 counts. March 28, 2024. Sentenced to 25 years in federal prison. But here's the part that should make your blood boil. Tom Brady? He lost $30 million he invested, but he's still worth hundreds of millions. Giselle? She lost money too. She's fine. Sequoia Capital, the venture fund, they lost $150 million. They'll make it back on their next investment. The teacher in Texas with $180,000? She's working part-time at Target at 63 years old. The guy who lost his parents' life savings? He's got nothing. The people who trusted Tom Brady, trusted the Super Bowl ads, trusted a guy who said he was the safe option, they're destroyed. One guy and his friends gambled with $8 billion that wasn't theirs. It's like if your bank gave your savings to the CEO's poker buddies. 1 million people lost everything while celebrities walked away fine. And here's what nobody's talking about. FTX had celebrity endorsers. Tom Brady, Giselle, Steph Curry, Naomi Osaka, Larry Day. They're all being sued. The argument? They promoted an unregistered security without doing due diligence. They took millions to tell ordinary people this was safe. Some of them are settling, paying tens of millions to customers. But it's not about the money anymore. The lesson from FTX isn't crypto is bad or don't trust exchanges. The lesson is when someone says, trust me, when they're sleeping on beanbags and donating to charity and driving a Toyota, that doesn't mean your money is safe. It means they're good at marketing. Sam Bankman-Fried stole more money than Bernie Madoff. He did it faster. He did it while celebrities helped him. And he almost got away with it because he had good PR.